Good morning and welcome back to the Tokyo Sydney overlap. Morning from those who are participating or joining us from the eastern side, and good evening to those who are joining us from the western side of the world. And let's get started off straight away with the Euro USD. Yesterday's FOMC, well, I was up quite a bit late, but the FOMC did not trigger the volatility that we were expecting, but it happens many times when it's almost a non-event, except for the fact that we could take some partial profits in gold. One of the positions were closed with where shorts were taken around 29.45. Yeah, but we are still waiting for three more positions to be closed in gold, so still hanging around on the short side. So the daily chart for Euro USD flashing up on your screens now. What we are seeing on the left hand side is the impulse wave, also indicating the direction of the trend, which has turned higher since July 2023. It's taken a couple of years, not 23, but I think it's July. Yes, July 23. Almost 2 years it has taken for a corrective ABC to complete, bouncing off straight through the Fibonacci 61.8%. 13th of July was the day when we, 13th or 14th, I don't remember exactly, but we've been meticulously following since the 1st of Jan. 13th of Jan was uh, bottom in place at 1.0177, and since then the story has been on the long side with potential waves ones and twos, and now either third wave. I got to get on the hourly chart first. So we've got waves ones and twos. Okay, that is wave one and two. This one. Got lower degree wave one and lower degree wave two. This could also be another ABC and another ABC if the triangle is forming, but it could, as I said, there are many alternate counts which could come alive when the corrective waves are in action. So this particular rally could also be wave three in action, and not only wave three, but you see one, two, three. That is one, two, three of three plus again it's subdividing into into five waves. So it's the third wave is extending, and it's not a surprise when the third wave I've seen extending. It has also happened in on the other side. You can see in the daily chart as well. The third wave was extended from the rally, which took place between 95 and 1300, 1275 precisely. So if the third wave is extending, then we are not going to see any further pullback or retracement once the bulls are back in picture. And I think they are probably now settled around the 30 mark, the RSI. There you go, just below the 30 mark, and then quick reversal. So if the bulls are now back in control, then we might not be seeing another corrective decline, which we were proposing earlier on. All right, so let's not speculate on how the price action is going to go after hitting 500 and let me bring up So earlier we were proposing prices would go and hit the 580 mark, and then we could see a five-wave decline to carve an expanded flat or a running flat or a triangle. That could still be possible, but we are not. We don't want to just speculate on what will happen after 580. Right, so let's be focused on what the targets are looking like in the near term, and it is 580. And then if it drops lower, we will look into it differently. Okay, and as I said, many permutations and combinations are possible, especially when the corrective waves are on. But the direction of the trade remains on the long side, firmly on the long side. I would say if I try and do this trend line, we can take this channel outside. There are two possible trend lines. One is that is possibly going to be the intermediate trend line going forward, and prices are going to stay in the buy zone of this trend line. And the other trend line is going to be if I connect these two lows, the 18th Jan and I think 20th Jan, 3rd Feb and 11th Feb, sorry. So we can see prices have slowly drifted towards the trend line support, and even if it drops one more time and tests the trend line, it's better for us. It would be further confirmation that bulls are actually wanting to carve a deeper corrective drop and then produce a thrust rally from here itself. But keep an eye on the dates, everyone, please. It is 20th of Feb already, when we are 6 trading sessions away, probably 6 or 7 before we come to we come to an end of February series, and that is where most major supports and tops and bottoms would be forming. So let's say if it rallies through 580, maybe it could next week it could drop and form a bottom fiercely for bulls to remain in control in March again. All right. So that's the wave theory. It's going to be on the long side, and we don't see prices coming back out for at least a few weeks or months. So please remain on the long side, taking fresh positions, adding to the existing positions, and the stop loss goes to 1.0150. All right. But you can keep at 1.0200 as well, but nothing higher than that, please, right now. Let's move to the dollar index. All right, I think there was a, a bit of technical hitch, but I think we are there now. Okay, what we are seeing on the hourly chart is not the hourly chart, but the daily chart is a five-wave drop, an impulsive drop, indicating that the trend, the larger degree trend, is down. And on the right hand side, what we see is also that ABC corrective wave complete. Prices pushing just above the Fibonacci 61.8% retracement. All right, and that is the past support becoming resistance zone. Again, a very important point where bears have just managed to 0.20. If you're using an 8 cap as the provider in dollar index, it's going to be resistance and all right. So what we were saying is an ABC corrective wave is also looking complete around 110.20 now. So broadly speaking, bears would remain in control with prices staying below 110.20 going forward. So larger degree trend should be down from here. And the only question is, are we already within the third wave? It could possibly be, and it could also be that the second wave is still going sideways. So so here's the wave structure. The lower degree wave 1 is in place. And lower degree 2 also in place. Now the only question we have is, if the lower degree wave 3 is already underway, then it's going to be much lower from here. We have wave 1, wave 2, again we still have wave 3 to complete, and then a retracement within that. All right, so the wave structure, the corrective wave structure, we need not really focus on which pattern is unfolding right now. I'm going to remove this wave for now, and let's focus on the recent drop or the immediate drop. Very well. The immediate drop is pointing towards 105.60. All right, and so please remain on the short side. It's been quite a drag in terms of prices. Uh, that is, of course, a typical property of a corrective wave, but that particular drag has been quite extended. So we need to see a break now below 106.80 and 106.70 to re-establish the confidence on the south side from here itself. I'm just a bit worried in the sense that the corrective rally may not come from here itself. It is quite possible though. All right, but the direction of the trade is firmly on the south side. and the stop loss for the dollar index is going to go around 109.85, uh, possibly around 110.30. All right, so whether you're wanting to add positions or you're wanting to take fresh positions, I think this is good price where we can say 107.09 right now, 107.10, and just in case if it pulls back towards 108.50, that would be even better to add further short positions. We are still not convinced that the second wave is over. That sideways action, three up, almost three down, has got another, at least another three up, or maybe a couple of more waves to go before the lower degree wave 2 actually comes to an end. All right, so that termination of wave 2, we're not buying right now that wave 2 is complete or at 109.85. It will take its own time, but I think we've got at least 6 to 7 trading sessions to go before the March sets in. All right, so let's get started off with gold. Dollar index on the short side and gold on the long side, or euro on the long side. I'm going to just flip the chart on a 15 minutes. It has done two steps which we were talking potentially last session. uh, there you are. It has taken out immediate support at 2923. So that arrow is not required. So that would be wave one of. It's a very smaller degree. So I'm just focusing on the smaller waves first, and let's then uh, try and get our focus on the larger degree waves. Correct? Because it's going to take some time before 2875 is taken out. And there you go. That is the sideways wave 4, which, I mean, we have projected, but the price action has still to confirm during that towards that direction. Now, if prices continue rallying from here and they shoot out over 2947, that means the structure in is something else in the making, and we will have to rethink and re-evaluate the probable wave counts that we have been following. All right, so we are we took partial profits in one of the positions in gold, but we are still holding equity from 29.20 and 29.15 as well. So let's if you are short, if you are holding short positions, recommendations are still stop loss around 29.55, with continue holding your short positions with the first targets. Let's take the first targets now because we have the boundary in place. We can take the first Fibonacci extensions pointing towards 2873. It's not the third wave. Actually, I've taken the simple extension, 3-click extension that is indeed pointing towards 2872, which is taking out that particular support as well. So I think we are good to keep this on. If at all there is a head and shoulder reversal, then prices would stay firmly below the previous high 2947. If at all there's a head and shoulder reversal, I can see potential right shoulder being carved out right now. So if the head and shoulder reversal is to be in place, then we kind of see a bearish turn from here itself. All right, so let's hold on to the existing charts. We are not recommending fresh short positions though. It would carry 38 zone right now, 38.40. The stop loss goes above 47. It's ideal to keep about 29.55 and near-term target around 28.75. That would ideally complete the first impulse, and we would be in a better position to then take it further from there and continue selling on a rally from there. All right. So we are focusing on the shorter time frames in gold, and let's see how the price action turns up when we are back during London times. All right. Pound. The pound is probably completing an expanded flat structure. So did you see how many times we changed? See, I will tell you, it's actually three times because I know this. We've done this time and again. Corrective waves are very tricky to handle. Before we come to that area, let me just uh, appraise through the wave counts. We've got an impulse rally 1, 2, 3, 4, and 5 already, followed by a corrective decline. So we've got minute wave 1 and minute wave 2 already in place. Those are the minute degree that I've shown, the smaller degrees. And on the right hand side, it could be a minute 1 and 2, and the third wave is going on. So that's the third wave rally. All right. And on the right hand side, earlier when we were, I think, when we were Tokyo, Sydney yesterday, we had considered a flat ABC when price action was here. And then during the London times, when price action went up to there, we were then changing ourselves to an A, B, C, D, and possible E wave. So we came to a triangle conclusion. Now, with five wave decline, you can see 1, 2, 3, 4, 5 wave decline from that high. This entire structure, which began from 14th of Feb, almost 6 calendar days. This is an expanded flat, sir. All right. So nothing wrong in it because you see that second wave was sharp. I always keep saying, if you remember, when the second waves are sharp, the fourth waves are sideways. They take time. So either triangles or an expanded flat in the making. They're absolutely perfect in terms of the guideline of alternation. All right. So that expanded flat now gives us more confidence that okay, we've got a sharp wave 2 followed by uh, an expanded flat wave 4. I think we should be good to go now on the north side. So a bottom is in place around 25.63 now. And of course we had recommended longs around 25.90 last session. But even now, if you're joining fresh and if you're not taking any position in pound, it's good to go long, sir. All right. And only thing is, please be aware that your stop loss cannot be anything higher than 2250. In fact, I would rather go and suggest to keep it at 2100 to avoid noise completely. But the next target from here is pointing towards 2800 short term. Of course, long terms are around 1.3 and 1.32. But I think now with that beautiful wave 4 complete, We are okay. The RSI is also settling around 50. We are good to go on the long side again. Okay, so pound structure remains firmly on the long side. Bulls are better in control than what we saw in the Euro USD. And now the two charts, Bitcoin and Solana. The story in Bitcoin is absolutely wonderful. In fact, we have pushed a couple of positions on the long side just a few hours back. And if I take you on the hourly chart, because the triangle is complete, it's not only indicated that the triangle is complete, but it's also indicating that the corrective wave might also be complete, unless the corrective wave is unfolding as an expanded flat. Okay, I always keep my options open. I mean that's three down, possibly three up, and another five down is still possible. So unless it is an expanded flat, okay, we can just have a corrective decline back towards that 95,000. But tell you what, sir, we are well positioned to kick off on the north side towards at least 102 in the near term, but the targets are pointing 115 and 123. Remember, it is a triangle breakout, and we all know what the triangle breakouts are made up of. We've seen Ripple do that, and sorry, and I think we'd also like to revisit Ripple on the next session sometimes, and the next chart. So Bitcoin firmly on the long side, and Solana with that expanded flat structure being complete on the daily chart. I mean, its prices are hovering around 169, 170. But if that wave 4 is complete, we are good to go in Solana as well on the long side. We have already taken long positions, but those who are wanting to take fresh positions are welcome to do so. Stop loss we are proposing is around 150 to stay away from the noise. But I think Solana has carved a bottom at 161, and this is a classic example of an extended wave 3 in the making. Now, if we go by, if what we are seeing and what we are identifying is correct, then Solana is going to go fiercely bullish from here as the third of third wave resumes. So it's not only it's wave one, wave two, again wave one, wave two. So that is the third of third wave rally, and those are the most powerful ones. The third waves are powerful, but the third of third wave, if they are extending, they are even powerful. All right. So that is the story. Those are the stories as we bring this session to a pause now, and we'll be back again during London times now. And thank you once again for tuning in. And until the next one, as always, happy trading. Good luck to your trades, and take care and God bless. Goodbye.